This is Alan Farley from FX Empire. Let's take a look at Dow component Coca-Cola. Start with this black line. This is the 1998 high in the mid 40s. The stock finally completed a round trip into this level in 2013. Now it did break out, but spent about 5 years crisscrossing the level before finally ejecting higher at the start of 2020. Got up to an all-time high about 60 and then plunged during the pandemic decline. Many of its venues were affected, including sports stadiums, movie theaters, restaurants, you name it. Even Coke machines were all getting impacted by the virus. The recovery was much slower than in other industries. It finally came back up to the 786 retracement in the fourth quarter, promptly reversed, came back down to the 50% retracement. Now, we'll take a look at price action between about December and now in May. We have a tiny little cup and handle pattern. You can see it from here to here to here. Now, we did have a breakout attempt in Monday's week market. That failed and it pulled back. It's trading a little bit lower today, but not much lower. And keep in mind that this is a dividend play or a flight to safety, which tends to do much better in tough markets. So I do think we're going to get a breakout, especially because if you look down at unbalanced volume, it's come all the way back to the all-time high in February of 2020. So this is a bullish divergence. It tells you that people are accumulating Coca-Cola actively. And once we get a breakout above this 55 level or 55 barrier, I think we get a very fast move up to 60 and then engage in a very prolonged test of this all-time high before we get into a major uptrend.